Millions of Americans who rely on Social Security benefits are watching closely this week as the Social Security Administration distributes payments. The agency has confirmed that certain recipients could see payments as high as $5,108. This figure is not the average benefit, and it does not apply to every person receiving Social Security. Instead, it represents the maximum possible monthly retirement benefit that can be earned, and only a small portion of retirees qualify for that amount. The maximum is reserved for individuals who meet very specific conditions tied to their work history, earnings, and the age at which they choose to claim retirement benefits. The way Social Security works is that workers contribute to the system throughout their careers by paying Social Security taxes. These taxes are withheld from paychecks or collected through self-employment contributions. Over time, a person builds up what the agency calls credits. These credits are used to determine eligibility for benefits, while the exact amount of the benefit depends heavily on lifetime earnings. The higher a person's reported wages over decades of work, the higher the retirement benefit may be. However, there are caps on taxable income each year, meaning only income up to a certain threshold counts toward future benefits. Workers who consistently reach that taxable maximum throughout their careers are in the best position to qualify for the highest possible payments. The $5,108 maximum applies only to retirees who delay their benefits until age 70. This is because Social Security rewards delayed retirement. The program sets what is called a full retirement age, which depends on the year a person was born. For many people retiring today, the full retirement age is 67. Claiming before that age reduces the monthly payment, while waiting past that age increases it. For each year, benefits are delayed beyond full retirement age. Up until 70, the monthly amount grows. By waiting until the maximum age of 70, a retiree secures the largest possible monthly benefit. That is why the figure of $5,108 exists. It represents the highest monthly amount someone could claim if they both maximized their earnings during their career and waited until 70 to retire. Retiring earlier results in smaller checks. Many Americans choose to claim benefits at 62, the earliest possible age, but doing so can cut the benefit by as much as 30% compared to waiting until full retirement age. Claiming at 65 or 66 provides more than at 62 but still less than the full amount. Only by holding off until 70 can retirees receive the maximum. This system is designed to give people flexibility, allowing them to decide whether to take smaller payments for a longer period of time or larger payments for a shorter period, depending on personal health, financial need, and family circumstances. Lifetime earnings also play a central role. To qualify for the maximum benefit, a person must have consistently earned the maximum taxable wage base set by Social Security for 35 years. The agency calculates benefits using a worker's highest 35 years of indexed earnings, and the average is what determines the base benefit. If someone has fewer than 35 years of work, the missing years are counted as zeros, pulling the average down. This means that steady employment with high wages is essential for qualifying for the top payment. For many workers, this is not realistic, but for those with long, high-income careers, it is possible to reach the maximum level. The payment schedule is also an important part of the process. Social Security distributes payments according to a staggered calendar to help manage the large number of beneficiaries. Payments are sent out on Wednesdays, but the exact week depends on the beneficiary's birth date. Those with birthdays between the 1st and 10th of the month are paid on the second Wednesday. Those with birthdays from the 11th through the 20th receive payment on the third Wednesday, and those with birthdays from the 21st through the 31st are paid on the fourth Wednesday. This system ensures that not everyone is paid on the same day, which could overwhelm processing systems and banks. This week, people whose birthdays fall within the scheduled group will receive their payments. If they also happen to be among the small group eligible for the maximum benefit, their deposit could be up to $5,108. Most beneficiaries, however, will receive much less. The average monthly retirement benefit is closer to $1,900, and many people receive less than that. The variation reflects differences in lifetime earnings, retirement age, and whether additional benefits such as spousal or disability benefits are included. If a payment is delayed, the Social Security Administration recommends patience. The agency advises waiting at least 3 business days after the expected date before reaching out. Banking systems, holidays, and weekends can all contribute to delays. If after that period the money still has not arrived, beneficiaries can contact the SSA directly to investigate the issue. In most cases, payments are deposited on time, but occasional hiccups do occur. Having direct deposit set up with a reliable bank account is considered the safest and fastest way to receive funds. The importance of these payments cannot be overstated. For millions of retirees, Social Security represents the primary source of income. While some people have pensions, savings, or investments to rely on, many do not. Social Security provides a guaranteed monthly payment that continues for life, offering stability and reducing poverty among older Americans. For those who qualify for the maximum, the $5,108 payment can provide significant financial security. For those receiving less, it still forms the backbone of retirement income. The amount each person receives is not only based on their own work record. In certain cases, spouses, ex-spouses, or survivors can also receive benefits tied to another worker's record. For example, a surviving spouse may receive up to 100% of the deceased worker's benefit. A lower-earning spouse can receive a spousal benefit worth up to half of the higher earner's benefit. These rules are complex, but they are designed to ensure that family members who may not have had long or high-paying careers still receive some support. The decision of when to claim Social Security is one of the most significant financial choices retirees make. Some prefer to claim early to have access to money sooner, especially if health concerns shorten life expectancy. Others delay to maximize the monthly amount, particularly if they expect to live well into their 80s or 90s. The system is structured so that, on average, the total lifetime benefits balance out. However, individual circumstances vary greatly, so the timing of claims has a big impact on financial well-being. For people still working, understanding how Social Security calculates benefits is valuable. Each year, the agency updates the taxable maximum wage base. Earnings above that limit are not taxed for Social Security and do not increase future benefits. Therefore, to qualify for the maximum monthly payment, a worker needs to consistently earn at least that taxable maximum every year for decades. In 2025, for example, the taxable maximum is $168,600. If someone earns more than that, only the first $168,600 counts toward Social Security. Consistently hitting that level year after year for 35 years is extremely rare, which is why only a small fraction of retirees qualify for the maximum $5,108 payment. The Social Security system itself is often discussed in political and financial debates, as it is funded through payroll taxes collected from today's workers. With millions of baby boomers now retiring, the program faces financial pressure. Current projections suggest that without reforms, the trust funds that support Social Security could face shortfalls in the coming decade. Despite this, benefits remain guaranteed under current law, and each month payments continue to go out as scheduled. For retirees, the immediate concern is simply knowing when and how much they will receive. Receiving up to $5,108 in a single month represents a significant income. To put this into perspective, that amount is more than many workers currently earn from full-time jobs. However, very few retirees qualify for that sum. The typical retiree sees much smaller payments, which still serve as a vital lifeline. The program is designed to replace only a portion of pre-retirement income, not to fully cover